Let's talk strategy now with James Shelton. He's the CIO of Canale Trust. James, the Fed seemed to have come up with something innovative, something to try to shore up these markets. But boy, today it just doesn't seem like it's working.
Well, clearly we're still in a bear market here until the market proves us otherwise. And I think there's a lot of skepticism over how effective the Fed's move is going to be. We're still a couple of weeks away before that liquidity gets injected into the markets, and we're just going to have to take a wait-and-see approach to see how effective it'll be.
James, hi, it's Louisa. Do you buy bonds now, then?
Hi, Louisa. We keep a diversified portfolio across various asset classes for our clients, but when we look at the bond market today, we think that across the Treasury curve, Treasuries are very, very expensive today. Just in terms of an attractive yield over the long term, I just don't see it today. But when we look at municipal bonds, tax-exempt bonds here in the United States, we do see very attractive levels.
When you listen to companies such as Bear Stearns, as we were hearing the other day, earlier this week actually, when you hear them say, we're all right in the liquidity camp, we're not in trouble, do you believe them?
Well, it's always difficult in this kind of environment to really determine where all the losses are going to be, and quite frankly, that's where a lot of the rumors come from, and that's why the financials are trading the way that they are, very volatile. Do I believe Bear Stearns? I don't know. We'll just have to see what comes out, but I think it's important to note that the financial system here in the United States has a very strong capital base that's been able to withstand these losses that we've seen, but we just don't know what the full extent's going to be yet.
James, hi, this is Christine here in Asia. The U.S. dollar, the greenback, really getting a hammering today. Right now, U.S. exporters, of course, stand to benefit from the weaker dollar. Is this a segment you're willing to put money in?
Well, we continue to like U.S. multinationals that have a lot of export exposure. That's where a lot of the growth is coming from, and I think that that's going to be the area that's going to help make this recession that we're brushing with here in the United States to be shallower than it otherwise would be. However, we would prefer to see the dollar stabilize at these levels for sure.
James, today it looks like we're clearly going to test those January lows here. Some folks are saying, this is a good buying opportunity if you're long term. Are you worried that you might be catching a falling knife if you move in here?
Well, it looks to us like 1270, which is the low point that the S&P reached on January the 23rd, the intraday low. We think that there's very strong support for equities at that level. What makes us continue to be a bit cautious here is that we have not seen some of the classic signs of bottoming action that we've seen at other major bear market lows. For instance, the VIX has not risen to the point that we've seen in recent bear market lows. We did see very strong volume to the upside when we tested those lows a couple of days ago. So we're going to continue to watch the market and see if some of the internal stats get close to where we saw at previous bear market lows, but so far we just haven't seen that.
James, Christine here again. You think the Fed is still going to cut by 75 basis points?
I think it's likely the Fed cuts by 50, and I think there's still a chance that the Fed will cut by 75. I believe that one of the reasons for the action the Fed took the other day with the injections of liquidity was to try to temper the market's expectations for a larger cut. But for sure, we'll see 50 basis points.
James, we're going to leave it on that note. Thanks so much for joining us. I suspect today you're going to get an awful lot of calls from worried clients. We'll let you get to the phones.
Thank you.
James Shelton, CIO of Canale Trust.